ECN Trade Technical Webinar. Hi, my name is Rob Clayton. The Australian dollar's attempts over the last 2 weeks have clearly failed towards that 77.50 region. And as you can see here now, after Friday's heavy decline, the threat for the start of this week is towards 75.95. With the likelihood of this level giving way, behind this view is the fact that we're technically in a bearish structure and the trend is quite strong. Then a break of 75.95 will open the way towards 75.40 and then lower down towards 74.80 to 74 cents. And in light of how the market is positioned, you can see here that clearly a break of this level of 95 will give that confirmation to the downside. Any renewed strength now looks to sell rallies towards 76.60 and above. Well, as you can see here, Euro challenges that level of 113.60-65 and fails. And now with a bearish outlook coming back for the start of this week, looks towards the support of 112.85.95. Now a break there would actually reopen the downside to an objective of 112.40 excuse me, and lower down towards 111.65.75. Now it is seen from there of 111.65.75 is a break will actually reopen the awaited target of 109.50. Although the dailies haven't come through as a negative confirmation, the 4-hour and also the hourly is clearly in a supportive of this move down. Well, dollar yen's now finding a bit of legs after breaking above 100, with immediate resistance being challenged at 160.65. In light of how the market's performing, we could see a move up towards 101.15. Now it's there, which was rejected before, as you can see here, is the break level to get the move up towards 101.75.85. So do keep an eye on that level today. If we do fail above 160, then the risk is that we see a fall back towards 99.80 support with the key level at 99.40. Although the BOJ is likely to be under the 100 level, a break of 99.40 would expose a potential target of 98.60 and reassess from there. Well, sterling very disappointing after the end of last week's rally. Fails up towards that support resistance of 131.75.85. From the heavy decline on Friday, the failed attempt towards 130.80 now sets the outlook into today's session of 130.20. In light of how the market's performed, it is viewed that if you have a look at the we're in an outside range day, but not strong enough to support a negative call yet, but nevertheless was a rejection. And you can see here from Friday the heavy fall now looks towards a support of 129.40.45 with the awaited key level of 128.45. Now a break there would expose the 127 region and reassess from there. Any renewed strength should now find resistance around 131.20.25. Well, since the rejection in gold around 13.56 to 58, the market still holds to a negative bias. And for the start of this week, we look for support challenging around 34 to 28. Now, a break beneath 28 would actually get the market talking further of a further decline and look for the bullish fortress around 113 the figure. So do keep an eye out for that level today of 28. Fresh advances on the day should find resistance between 44 and 50. And to wrap with oil, we are still overbought. Clearly here, as you can see, after the bullish outside range day and also the 7-day candles to the upside. I wouldn't, at this stage, do not rule out a further test up, even though we are overbought, but towards 49.20 to 50.80 should find or struggle towards this region. I still feel the market can pull back to around about $47 a barrel and reassess from there. Well, that's a wrap. Thank you very much for listening, and I hope you enjoy the start of the week.